Hi all, thanks for joining us here today at Framework FX. Now, before we get started, I'd just like to apologise to all the newfound fans of the channel that we haven't been uploading the last few weeks. Unfortunately, we've been incredibly busy and just haven't managed to get the videos done how we would like to. But that's all over now. We will be firing out videos on a regular basis again. So please, if you're not already, like and subscribe and ring that notification bell. Some really great stuff coming up. And we're also thinking about starting a Monday morning market breakdown, which should be with you in the next few weeks. So keep an eye out for that as well. Now today, I got put on from the comments. Someone mentioned a channel called Trade Pro, so I went across there and checked it out. And it's a really great channel. If you haven't seen it before, please jump across there and have a look. But one of their videos stated that they had a strategy with a 76% win rate, which I found really interesting. I thought that would be great to backtest. So today we're looking at the highly profitable 76% win rate from Trade Pro. We're going to backtest it, have a look at it, and see how it stands up. So stay tuned for that, and we'll be back in a minute. Okay, so the strategy. So for this strategy, we need three things. So to start with, we're on the hour chart. It's important to note, and I'm using pound dollar as I always do for this. Like I said, I'll just really quickly run through this strategy. I'll leave a link to Trade Pro's video, so you can see it in a lot more detail there if you would like. So what we're using is three exponential moving averages. We've got a 50, we've got a 14, and we've got an 8. Okay, and they look a lot like this, running down. Okay, then we need a stock RSI, and we're just keeping that with the stock inputs that you get through TradingView. And then lastly, we just want the ATR. We want it set at 14. Okay, so what we're going to do now is we're going to look at this. Okay, so if we just run it through, so we get this push, right? Okay, and now price is below these three moving averages, so we're only looking to sell. Okay, and what we're looking for is we're looking for all the moving averages to fan out quite nicely as this move. We can see it there, is what I'm talking about. They've all crossed over, they're running nicely. So then once we've got that and it's looking okay there, what we're after now is a cross back down. So we're looking for this to up and then cross back down on the stock RSI. That'll make more sense in a second. So we've got this cross up. Now we're looking for it to cross back down, which is about to do there. Okay, so we actually, oh no, sorry, we just missed it there. Not quite. Further on than I thought. There we go. Okay, so actually I think we went one too quick on that, did we? Oh no, I'm telling you a lie. There we go. So it is this candle, so we're going to take this candle. Now, here are the rules for this. Once you get that, so we're below these three, we're looking to sell. Stock RSI has crossed from above to below, and then we're looking to enter. So now this is where the ATR comes in. So what we look at now is we look at this candle, we see, as you can see in the bottom left, it's 20.3. Okay, so it's roughly, and with this strategy, Trade Pro uses a negative risk reward, which I've never done, and this is what sort of intrigued me to this strategy. I don't really use negative risk rewards, and that's why I thought it'd be really interesting to test. So what you use is 3 times the ATR as a stop loss, so roughly around here, and then just 2 times the ATR as a take profit, which would be 0.66, which fortunately is where we landed. Okay, so that's how it looks like. Interesting, yes, and as you can see, you get in and out quite quickly once you enter the trade. Okay, so that would be a winning trade, would be 0.66 up. So now we start again. Okay, we're out of that trade. We're looking for another entry because we're still below those exponential moving averages. We're looking for another cross back, and we get it there. Okay, so because these three moving averages are still below one another, this is still a valid entry into this trade. We take that there. We look at the ATR, it's 19.5, so it's just below 60. Just roughly put it in there. And then this would be 0.66 risk reward, as you see there. And again, we run through it quite nicely. And this is how this strategy really works, is you get nice moving downtrends, and you can get in and out 2 or 3 times on a nice moving downtrend. So look, see if we can get it again. Okay, criteria met. All 3 moving averages are below one another. We've got our cross. We're looking to enter. We're not in any other trade, so we're looking to enter 24.1. Just short of 75, really. We're looking at somewhere around there. And then a 0.66. And another easy run through there, as you can see. So that's the strategy, guys. Exactly the same in reverse. For long trades, we're looking at these 3 exponential moving averages crossing back above one another, and then we're looking for the cross from below back above on the stock RSI. So really simple strategy once you get used to it. It's got very well predefined stop loss and take profits, which is good. We always want that. But yeah, like I said, I'll leave a link in the description. Go across to Trade Pro and have a look there at the video for more detail on how that strategy actually works. But in the meantime, now for us, let's jump across. Let's take a look how it performed in our backtest. Just before we get on to results, as I always mention, we do have a copy trading service over at frameworkfx.com. I say it all the time, it may be of no interest to you, but it may be. It would really mean a lot to us if you could just jump across there, check it out, and see what you think. Okay, so the results are in, and this is what we're looking at. Okay, so straight away, as I always do, I'll take you straight across to see how it performed overall. And as you can see here, a 40.96% positive return on the year. That's very good. It's a little bit different to what we saw in the Trade Pro video. They said they made 40% in 6 months, which is fine. The thing about this strategy is it seems completely mechanical. I found from backtesting it's not always completely mechanical. Okay, there is still a bit of judgment left to be in there, and through backtesting you'll see what I mean. It's not a huge amount, but there is a little bit, so that's why maybe you can see a bit of a varying of results there. But I take you across to this. So they obviously claim in the video with a 76% win rate. I thought that would be crazy. Well, not crazy because it had a negative risk reward, but I thought it would be impressive, and I actually found that we ever so slightly outperformed them over the year with a 77.78% return. Now there's several reasons why I think we've done this, and I will get onto them later in the video, but firstly I just want to start by breaking down the results. So if we look over here, we look at the months first, and as you can see we only had one losing month. That was January, and let's be fair, it's not really a massive losing month. So let me just explain. I traded July 2020 through to December 2020, and then January 2021 through to June 2021. So it's literally the last 12 months from now. So yeah, as you can see, January 2021 was the only losing month, and that was nullified. October, as you can see, 1.26%. I remember from my own trading that October was a bit of a stale month, so that could explain why. But yeah, let's take a look at the trade. So we took 135 trades. We had 105 wins and 29 losses. So what I would say from this straight away, this is a great strategy for someone straight out the blocks, new to trading, getting into it, that maybe doesn't have the confidence to be taking multiple losses. Okay, it's one of the toughest things in trading is taking constant losses. Okay, or having, you know, maybe a 50% win rate. Okay, so you're losing as many as you're winning. That's psychologically a difficult thing. Even if you've got a positive risk reward ratio, I can tell you from experience, it is still a mental battle to be able to put that aside, completely ignore it, and you know, get on with your trading with discipline and with consistency. It's hard to do that when you're losing as many as you're winning. So this could be a great alternative. Okay, you are winning significantly more than you're losing, and it's not that much different. Okay, again, I'll talk a bit more about what I think could be improved maybe on this strategy. But again, it's hard to argue because it's returned a positive. You know, 40% on a year is good for anyone, really. Anyone should be pleased with that. So if we take a look into this big, thick bit of information here, and again, as I always like to draw you to the drawdown. Now, the drawdown was just -3%. Again, that's fantastic. We're really pleased with that. We'd be really happy with that in our own trading, especially with a 40% return. Okay, because that means that you can maybe increase your risk a little bit, especially if you start trading it consistently well, and boost that 40% win rate. What else do we have in here? So, yeah, we made a little bit more with long trades. I would suggest maybe because we took it back end of last year on the pound dollar, things were starting to improve post pandemic. So maybe we're just getting more long trends and long opportunities there. I wouldn't say there was any particular bias with this strategy, long or short. It's likely just to be a coincidence that we've made a bit more going long. Okay, so if we pull out of that, let's go and take a look at days of the week. So if we pull that up, again, we see this quite often, or we have done throughout the back test that I've done for you so far, and I think there is a reason for it. I think you can see obviously Monday, Tuesday, without doubt the strongest days, and we sort of, you know, Friday was our weakest day. This strategy again is a trend following strategy, so we're relying on that hourly trend. And you come out of a weekend, we've had moves, we've had news and information, so we're going to get moves Monday, Tuesday, okay, as the markets begin to correct themselves, and we're just jumping onto them trends. And this is a strategy that will get you into a trend quite early on, and obviously get you out of it quite quick as well. So I think that's probably why we're seeing Monday, Tuesday being strong days, and why we're seeing Friday as the markets start to slow down, start to flatten maybe a little bit as money pulls out of the market. Maybe that's why we're seeing a slow Friday. Okay, so you wouldn't, but because they're all positive days, you wouldn't be particularly saying, oh, well, I'm not taking a trade Friday because it's slower, because it's a winning day, you know, so that doesn't particularly need to affect your trading, really. So if we come now finally to look at time. So again, I would like to remind everyone that I'm based in the UK, and I've had comments previously about, you know, it needs to be accurate because you won't be trading overnight and things like that, and that's completely fair. So I do always highlight, I would normally trade between 6 AM, as you see here, and I would take trades till as late as about 7 PM at UK time. So that'd be this, if we cut this out now, and that returns, let's have a look at that. That would return 31.5%. Okay, so still a pretty good haul. You know, it shows that it's not trading badly overnight, which is good. But yeah, so if you were just trading this through the London trading session and into the evening, crossing over a little bit, you would still make 31.5%. So that's great. We're happy with that. It means that it is tradable for people that are able to trade them time frames, and you're not going to take that much of a hit by missing the overnight trade. You are going to lose out on a few percentage points, and that's another thing with this strategy. I'm not going to go into it in too much detail because we don't really talk that much about it, but it is a strategy that I think a good coder could automate. So it could be something to look at. I'm not saying that I could do it, because I'm not particularly that strong at coding, but I think it's definitely it's got quite strict rules. But the caveat to that, I would say, is maybe this strategy does improve. The more you see trades, the more you get an eye for it, the more you can sort of decide whether to get in and out of a position. I don't know. I've only back tested this for 1 year. I haven't tested it live, so you know, that's something to consider taking a look at. Okay, if we pull out and we take a look at our visuals, and yeah, we love to see that. We love to see a profit line moving in that direction. Very few pullbacks, because we've got that negative risk reward, it means that we are winning quite regularly. As long as you don't go on big losing streaks, which again this strategy doesn't really do, especially if you sort of like can avoid flat markets, which if you're looking for the fanning out of moving averages, you should be avoiding them anyway. It's great. It looks really nice. That's what we want to see. Like I said, we've got a low max drawdown, so you could even increase your risk and boost that up a little bit more, because we were just using 1% risk. Sorry, I should have stated that earlier. Just using 1% risk per trade. So yeah, that looks really good. And the months as well, I found this a bit interesting. Again, I don't know if this is a bit of a fluke. Obviously, as you can see there, you've got February, which we've had a good month, and then it's eased off, slowed off into June. July, you've got to remember that that's obviously July 2020. So July 2020, we've obviously had a big, coming out of the pandemic, or the first stages of the pandemic, should I say. We've had a big boost. It's slowed off into Christmas. Coming out the other side post-Christmas, February 2021, nice push up, and then another slow decline off. So it'd be interesting to see if someone was to re-backtest July, the July that we're going through now. It'd be interesting to see if maybe some months do perform stronger consistently over the years. So what could we improve? Not loads. I don't think loads. I certainly think we could increase our risk to maybe 2 to 3% per trade. Sounds quite hefty, I know, but with that low drawdown, if you can keep it relatively low, I'm happy with a drawdown that's anywhere sort of under 15% a year. I'm pretty happy with that kind of drawdown. So if you took 2% a trade, this could be an 80% year for you. I definitely think that's to consider. From backtesting as well, I would say maybe point 2 would be, I think we could increase. I don't know if it necessarily needs that negative risk reward. It might bring the win rate down ever so slightly, but I actually think a minimum of 1-to-1 risk reward ratio, I think, could garner you almost a similar win rate, because you are getting into them trends early. You're not talking for that many pips, and I would say probably best part of 90% of these trades ran straight through that 0.66 targets, easily touching 1-to-1. So that's definitely something to consider as well. And I would say that's probably about it. There is probably a little bit of discretionary trading involved here, but I think as a purely mechanical strategy, I think it could work for newbies as well. Anyway, so if you're new and starting out, definitely consider backtesting it and seeing what you think about it. I think it really could help, especially psychologically, with that high win rate. So guys, all that's left for me to say is thanks for joining us. I hope you got something out of the video. If you did, please consider liking and subscribing. And also, as we mentioned earlier in the video, please do jump across and visit us at Framework FX. Just take a look and see what you think. Thanks for joining us, and happy trading.